You're watching politicians make trades that seem to magically time the market perfectly. You see the headlines about congressional stock picks outperforming the S&P 500, and you wonder if there's something you can learn from their moves. That instinct isn't wrong, it's just catastrophically incomplete without knowing which politicians actually know what they're doing. I've spent years tracking what the smart money actually does, and Tommy Tuberville's recent trading pattern caught my attention for a reason most people miss. Here's a former Auburn football coach turned Alabama senator who's been making some surprisingly sophisticated tech plays. His latest moves reveal a strategy that goes way deeper than random stock picks. Between his massive semiconductor bets and his perfectly timed Tesla exit, there's a pattern here that most retail investors are completely missing. But the most telling trade isn't what he bought, it's what he sold. Let's start with Tuberville's biggest recent play, a $50,000 to $100,000 purchase of NVIDIA stock. This wasn't some small speculative bet, this was a serious allocation from someone who clearly understands where the AI revolution is headed. What makes this fascinating is the timing and size relative to his other positions. He's not just throwing money at the obvious AI play. He's positioning for something bigger. And when you see his other semiconductor moves, the strategy becomes crystal clear. But NVIDIA was just the beginning of his tech shopping spree. Here's where Tuberville's strategy gets interesting. While everyone was debating whether Tesla was overvalued or undervalued, he quietly sold $50,000 to $100,000 worth of Tesla stock. The timing of this exit tells us everything about how he views the EV market versus the broader tech landscape. This wasn't panic selling, this was strategic reallocation. He was moving money out of Tesla and into something he saw as having better upside potential. And when you look at what he bought next, his thesis becomes obvious. That's not even the wild part about his portfolio reshuffling. After the Tesla sale, Tuberville went on what I can only describe as a semiconductor buying spree. First, he picked up AMD stock worth $15,000 to $50,000, positioning himself in NVIDIA's biggest competitor. Then came the Broadcom purchase, another $50,000 to $100,000 play in the chip infrastructure space. This wasn't random diversification, this was a calculated bet on the entire semiconductor supply chain. He's not just betting on AI chips, he's betting on the infrastructure that makes AI possible. But his tech strategy goes beyond just semiconductors. Alongside his semiconductor bets, Tuberville built positions in the established tech giants that actually have the cash flow to fund this AI revolution. He bought Apple, Microsoft, and Meta, each in the $15,000 to $50,000 range. These aren't moonshot plays, these are foundation stones. Apple with its ecosystem lock-in, Microsoft with its enterprise AI dominance, and Meta with its metaverse and AI research investments. Together with his chip plays, he's essentially built a complete AI infrastructure portfolio. The pattern reveals something most investors miss about playing tech trends. When you step back and look at Tuberville's complete trading pattern, it's not about individual stock picks, it's about positioning across an entire technology shift. He sold Tesla, which is primarily an automotive play with tech elements, and reallocated into pure technology infrastructure companies. From the semiconductor manufacturers to the software giants that use those chips, he's betting on the picks and shovels of the AI gold rush. This is exactly how institutional investors think about major technological transitions. Most retail investors pick one AI stock and hope for the best, but smart money spreads across the entire value chain. Here's your action plan. First, don't just copy these trades blindly, understand the thesis behind them. Second, if you believe in the AI revolution like Tuberville clearly does, consider how you can position across the entire technology stack, not just one company. Third, use tools like congressional trading trackers to see what other informed politicians are buying and selling. And finally, remember that these are disclosure ranges, not exact amounts. Size your positions according to your own risk tolerance. If you want more insights into tracking smart money moves and building systematic trading strategies, check out nexusaicalls.com.